All righty, welcome traders. It is Wednesday, November 22, 2023, day before Thanksgiving. We're thankful for a lot of things here at the Income Navigator service, and I wanted to get this video out tonight. You guys have something to do tonight as you're getting ready for maybe Turkey Day tomorrow for many of you. Let's just jump in and see what we did. And if you weren't on with us earlier, you can check out in the YouTube channel here. I posted it in mine. I think Igor will post it in the Mr. Top Tick channel as well on YouTube. Igor and I did a joint session, the two of us. Lots of great things. Igor went through his SPY 3-day-a-week campaign that he's been doing for years and how that's been working. So he covered that. He covered 112 trades in a portfolio margin account, how he trades them, which is different. So he and I do have different styles of trading. So he did cover how he trades a little bit differently than I do. I did cover some of the different versions of 112 trades, as well as what you can really do when you start to add more than one or two contracts, how you can start to adjust, how you can size them for different types of volatility, different types of markets, whether you want to be hedging, whether you want income, whether you're in a bull market, a bear market, neutral market. They can be sized, changed, all kinds of different things differently. You can take legs on, legs off, add legs, roll legs up, roll legs down. Lots of different ways to trade for those of you that are interested in it. And I covered a lot of stuff on strangles yesterday, so if you haven't seen that as well, you know they're my two favorite trades. I love strangles, one of the greatest return trades I think we can get into. And you know I love the 112 that I've been trading for many, many, many years here and all the different versions. So let's hop into the markets and see what happened on the day today. Let's jump in and take a quick look. And here's SPY. SPY on the session was massively unchanged, up $1.75 on the day, just floating around out there, not doing a whole lot of anything. And SPY, you're up, you're down, light volume. Everybody's on vacation, it seems today. SPY just not doing a whole lot of anything, so really doesn't change any of the narrative. Weekly still heading up. Daily's overbought on RSI and continues to be there, and we continue to just move slightly higher on the scale here as we get farther away from the 3 ATR. I mean, this market is overdone, but it can stay there and continue to move higher. And the weekly is not even close to overbought yet, so I think there's more room to the upside. I really would like to see that pullback and then a big rip to the upside. So that people can get in a second time. But other than that, it's all good. Taking a look at the Qs, pretty much the same type of scenario, up at $1.59 on the Qs. Not a whole lot of anything. Oversold RSI, above the 3 ATR on the daily. Weeklies are moving strongly higher, coming out of a squeeze. I think it's a really positive look on the Qs. And if we take a look at IWM here as well, pretty much a nothing day today, up $1.11. So the three indexes together here on the ETFs, total of maybe $3 between the three of them in change, and just a whole lot of nothing on the volume side. So we'll keep this pretty short today. Just moving sideways on IWM here, not in the overbought territory. So if we get a little bit of pullback, I think you get a march to the upside on that. We look at the put-call ratio, fell again today. The more it falls, the more bullish the market will react to it. I think that's all good stuff. VIX dropped again, breaking the 13 handle. Now VIX is now down to 1285. So getting back to really the lows that it's been. 1268 was the low in the last year, and that was what is it? August, I think. Let's see, September 11th. So the week of September 11th is the low. So VIX is almost at the lowest point it has been in over a year. So volatility essentially dead as the markets have just risen higher. US dollar today jumped up a bit. So we saw the dollar jumping up, coming off of these oversold levels here. Weekly still negative, weekly still bearish and falling. But maybe finding some support here around the 3 ATR level and the Bollinger Band on the bottom, and MACD again for two straight sessions trying to do some recovery. here as well, and RSI coming off of those oversold levels. So, good stuff if you want the dollar moving higher. If we take a look at the bond yields, specifically the 10-year on the day, essentially unchanged, down 2 cents. It had dropped earlier and then rebounded on the day. MACD continues to try to recover, but really just sideways. MACD and RSI absolutely sideways. Bonds going nowhere, or bond yields, I should say, going nowhere now for over a week. On the weekly, though, it has been negative and trending down from those overbought levels that you have. But right now, it's finding some comfort in this 4.4% range in here, and I think that's where the market might stay for a bit. We'll see. I do expect that bonds at some point will probably make yields will make a little bit of a move higher. I really don't see a catalyst for that. I just don't see a big catalyst from moving a whole lot lower. I think we're settling in here somewhere in this 4% range, low fours. And then if we take a look at TLT today, pretty much nothing day on TLT. The weekly's been strong, moving up. The daily's been moving up decently here, but MACD has really struggled for about a week as bond yields bonds have just not done a whole lot of anything. RSI is slightly climbing, but it's almost imperceivable what's happening. Now, the one thing to keep in mind here is, as we're hitting these daily highs and moving up on TLT, is RSI confirming that? MACD is really not. RSI pretty much is. The highs back here on RSI, 62.4, and then today, 62.9. So, I mean, technically it is higher. So there's not really any divergence at all here to indicate any kind of a pullback. I think we just continue to march higher on this. Do you get any kind of a pullback? It's not massively overbought or anything here. So more upside potentially to go. You're breaking this one shorter term downtrend. So that's pretty much gone. We're really looking now at this longer term trend, and we're getting pretty close. So we're getting close to this little longer term trend in here if we continue to improve. But I think maybe this downtrend might be broken. We've got an uptrend starting. You've got, at least on the daily here, you have higher highs, several higher highs, and a couple higher lows. All good on TLT. Taking a quick look at the futures. I'm going to run through them quickly. On the Aussie dollar, down on the day with the dollar up. On the British pound, down on the day with the dollar up. On the Canadian dollar futures, up on the day. So up just a tad on the day, and then the euro is down on the day again. The dollar's up, and the euro 6E here is coming off of overbought levels. So good little pullback, I think, is really healthy for it. Bonds still just trying to break through. It did, but not decisively. Bonds just aren't moving a whole lot of any direction, except really drifting slightly higher on the 30-year and the 10-year. Pretty much an identical looking situation. So I think one thing to look for here is potentially something along these lines with a ascending wedge here. So you've got a ascending wedge that's moving higher. If we don't break higher, we could see some lower action here on bonds. Oil, really interesting day today. Had everybody in a slight bit of a panic. I think if you're not used to that oil volatility, oil can move. And on the day today, oil cratered down about 3.5 points, a pretty good down move on the opening session today as oil volatility spiked. OPEC delaying their meeting from Sunday, delaying it 4 days. I think the main reason here is they've got some rogue nations, as I call them, outside of OPEC. So you got OPEC plus. You're adding in Russia. You're adding in Brazil to these. As the OPEC plus nations, these guys are hard to control. Russia not really following the OPEC script of cutting back their production. So They got a war to fund. Well, Russia needs money. Their economy's in shambles. The war is taking its toll. They got to sell oil. They're going to do it no matter what OPEC is saying for the most part. Brazil, they're just a mess anyway. They're going to do their own thing. So initially, maybe some consternation over the fact that, hey, they can't get everybody on the OPEC Plus in line, and maybe they're looking for some extra time to try to do that. But I don't think that's necessarily bearish news. I think the reaction this morning was way overdone on oil. Am I saying oil should rocket back up into the 90s? No. I just think oil's good here in the 70s, in the mid 70s. I think that news was overblown, and we saw it this morning. So if you panicked and sold and closed, you missed out. If you got in this morning, naked puts, 112 trades, strangles, whatever you might put on when volatility was really cranking on oil here, I think you think you had a pretty good day. So we, look at this candle, finished way off of our lows of the session, lows down to 74, and we had risen all the way back to 78 before closing around 76, 78. So overall, not too bad. A 99-cent down day on oil. So really, it was only down about 1% when earlier in the day it was down almost 4% on the session. It's had some pretty volatile down days, but it's also had some pretty good up days. Let's see if the momentum continues. You've got MACD rising, but you've got RSI just trying to find its footing in here while it still struggles with this weekly downtrend that it's in. So I still like oil, still like where we are. We'll take a look at the oil volatility in a bit. Gold on the session today, slightly lower, down $9 on the day, 0.5%. Nothing really to look at except that this downtrend line that we have on this weekly, okay, we failed at now for the second straight day, even though MACD was rising. So looking at gold here, I think gold's ready to run. I think gold's ready to squeeze, pop itself higher a bit. If we look at the other contracts on gold as well, pretty much the exact same thing that we're looking at here. However, we just came out of a squeeze type of an environment here on the weekly, which shot us up a bit higher. But then we have just cooled off since then. So I think it's good. I think if you look at where your 3 ATR levels are here on the weekly, okay, way up here and down here, and you look at your Bollinger Bands, which are opening up, volatility is starting to rise a bit on gold, even though gold volatility itself is not indicating that. But with these bands starting to open, I think that gives us some more opportunity for gold to start to move a bit more. Now, overall oil volatility, it was up pretty significantly on the session, up 11%, back up near its more recent highs, back towards this 200-day moving average around 47 or so. And if we look at gold volatility, it had dropped on the session today, overall, down about 5%, but it's been down for a while, tried to spike up a bit yesterday on the move, down a little bit today, but I think you're getting ready to see gold volatility start to expand again and gold maybe starting to get moving. So there's your futures. Looking at the sectors heading into Thanksgiving tomorrow, pretty much a nothing day here. Your main up sector was the biotechs, and that was only 1%. Nothing else even topping 1% up or down, and only 2 sectors down, and they were only down 0.05%. So pretty good broad-based day of nothingness today. So really no sectors getting moving. If you take a quick look at some of the stocks out there, Apple up a fraction on the session, closing off its highs though, and its RSI and MACD are a bit overdone, and it's above the 3 ATR. Microsoft below the 3 ATR now, and MACD and RSI are falling a bit on Microsoft, but it had an up day today. Amazon, a recovery day today, so erasing everything from yesterday's down day to moving back up and moving pretty well here. Amazon is in a weekly squeeze. I think that any pullbacks here are opportunities to get long on Amazon in that weekly squeeze. Meta also in a weekly squeeze here with an update. I think Meta looks good. I think Google looks good. It's been just on a tear since gapping down on earnings. Again, you get the 3-day rule, and then you're good to go on Google. It's also in a 2-week squeeze. NVIDIA, which had its big earnings last night, was pretty much a dud as far as earnings go. It dropped a bit on the session today, down 2.5%. Great earnings, great revenues. I don't know if it's sketchy or not, the orders that they're booking. I guess the markets will sort that out at some point. But MACD and RSI are dropping and have been dropping for a couple sessions. So the momentum here really was starting to wane on this. It was too much of a run going into earnings. You would have had, I mean, I don't know what more they could have done. The earnings were great, but it's just too much of a run here. You got a bearish PSAR reversal signal on NVIDIA. I'm not telling you that NVIDIA is going to 400 again, but it has oscillated between 400 and 500 pretty frequently here. So something to keep an eye on. And then your Tesla, only along with NVIDIA, your two down movers today. Tesla down almost 3% on the session as Tesla continues to struggle a bit sideways here. It's just consolidating sideways, not able to keep any momentum going. Maybe a gap fill is needed down to this 225 area. So we might be needing to fill this particular gap. So this will be something that we will keep an eye on is, can we fill this gap? But there are gaps everywhere. I heard someone refer to it as Swiss cheese below here. So most everything that we're looking at has gaps to fill. There's gaps everywhere, except Microsoft. Microsoft does not really have a lot of gaps to it. Small, tiny stuff on Apple, but there's a lot of gaps down below to keep an eye on. All right, so there's where we are as far as the markets go. Let's take a quick look at our particular accounts, and let's jump into the accounts and talk about what we did or did not do on the day today. So let's take a look first here at the trade tracker for the main account. It's the Income Navigator portfolio, and in this portfolio, Delta 161, which is 0.05, super flat Delta. Love where we are, very Delta neutral. Theta bumped up to 1298, especially on that oil volatility moving up. 1298, great Theta. Exactly 0.4, which is exactly where we want to be if we can, especially in a low vol environment. It's fantastic Theta in a low vol environment. Net lick drop today is all oil, so oil dropped the net lick on the session today. BP usage rose a bit to 212. Got a little bit of a span margin increase here on oil as it's shucking and jiving a bit, still at 65%. I did add more BIL today, so we did add more bill to the portfolio. I added another $10,000 in bill, so right now we're at $110,000 worth of bill. It's now using about $27,000 in margin, which is not quite 10%. So if you take away, the $27,000 out of this, you're down pretty close to 50%. So we're in great shape. I mean, love where we are here. Didn't close anything today. No need to do that. We added some bill, and that was pretty much it on the session. We look at the small account. Really nothing going on here. This has been pretty much just a sideways. We're just letting Theta work. Theta's still low, and our BP is low. We got to get some trades on. I just wanted to wait for a little bit of a pullback. We still have everything we need to hit our gains. We're already up 4.3% on the month as far as our realized gains go, and I think that's good enough for us right now on that. And net lick's down just a fraction. If we look at the IRA itself today, Delta 134. Perfectly great Delta. Our Theta is a little low, 0.1%. Like to get that higher here for the IRA. 239, so it's just a fraction. 239,823. It's $300 off an all-time high here. BP usage dropped again. We're down to 34%. We did close out a winner today. So we closed the naked puts on one of our 112 trades, exactly as we planned to do. We're now up 6,165, 2.58%, which is ahead of our 1.5% target that we have in the IRA account. So IRA flying high, doing great. And we're doing well here. Let's take a quick look at let's skip and go right to the account. I'm going to give you guys just a quick glimpse into the actual account. Let's take a look and see where trades are today. So here's where we are. You can see the P&L on the day. Your biggest losses have been in oil. It's all good. We totally understand that. Are we in any kind of an area to watch for? Well, we've got a 112 here, which is up 48% so far in 44 days. The naked puts are still up decently. They're way down at 62. Nothing to do there. We do have a strangle, which is up 13% right now. Nothing to do on that strangle. We'll let that thing continue to move. You got some naked puts that are down. Of course, naked puts are going to be down when the market has been dropping. I like where we are. Nothing to do on those. We'll leave those alone. Take a look at another 112. This 112 now, we just opened yesterday, so timing is everything. Opened it yesterday. We're down a fraction on this thing in a day, down $800 on this particular 112. However, we're nowhere near trouble at all on the naked puts at 58. And we're not anywhere near our trap. So too early to do anything here. Here's another 112 that we've got 19 days out on this one. Nowhere near the naked puts, slightly negative, down $300. And then we have some naked puts that are cooking here. They're up 36% since we put those. This is a rolled naked put. So these are up 36% right now. And then we've got another strangle down just $180. On this. So overall, when you've got a underlying that's dropping the way oil has been dropping and some of the volatility, I mean, today, a decent drop early and then it recovered and managed to hang in there on the day. But, oil's dropped from 94 down to 76 or so, and it's almost down 20% now since October. And our trades are doing pretty well overall on it. If it wasn't for today, we would actually be up on all of our oil trades as a whole. So we're just fractionally down overall since the open. Taking a quick look at ES, we've got plenty of FB 112 trades working. We've got the new tiered 112 that we just started. Some other 112s. Strangles are down a fraction here on these. Nothing major to do there. We've got the remnants of a BA 112 just to put debit spreads that have already been changed. And then a long-term 112 where the put debit spreads are still alive there. Gold, we got a strangle here up 40%. We've got another strangle here up 20%. Gold doing great. HD for our copper trades on HG. We're up 93%. We got 5 days to go in this trade. We should have hit a 100% winner on this and probably finish everything out of the money. We're in this live cattle futures. We're down 13%. We're down $300 in 7 days on live cattle. We really didn't take a look at live cattle, but it did, close lower again today. So it's been down, and we've been in this trade for about 7 days. And for most of those 7 days, I think we've been up and down, up and down, up and down, and we're pretty much unchanged, to down slightly. On bonds, we got a 112 trade rocking on bonds here. This thing's up 60% in just 2 days, up $453. So that's doing really, really well. And then we added more bill today, taking us up to 1,200 shares, using about $27,000 in buying power right now. And we're controlling $110,000 worth of bill. Again, $110,000. I believe it's paying about 5%, 5.3, 5.2. It's been dropping a bit. That's $5,500 a year, which puts us at about $460 for the month. So in about another week or so, we should take in $460 in BIL, and we're using $27,525 in margin. That's a nice 1.7%, almost a 2% monthly return on our bill position, which is just using some of that excess cash that we've got working right now. We have no expense for that at all, because it's only up against our cash. When you're in a Reg T account and you're trading futures, and you're using bill, you can only go up to your cash amount before you start paying margin interest on it. So that's why we'll keep it where it is. We plan to be pretty smart about it, and if we're going to stay out of the trouble. So we've got plenty of cash in this account. We could actually double our bill position. I just don't want to get there if the market starts to sell off and buying power goes up. I like where we are right now. We could double it. If I double it before the end of the month, we got the dividend coming up or the distribution coming up next month. However, you get in at a certain level, then the distribution comes right off of that level and you're kind of a break even. But we'll see. It doesn't really cost us anything, so we may add some more bill next week if our buying power continues to stay low and our cash excess remains high. All right, there's where we are. If you like this video, you know the drill. Click the like button down below here. Click the subscription button if you're not a subscriber as well. If you did not catch the session today with Igor and myself, go ahead and watch that. I think you'll get some great ideas out of that, some thought-provoking things to start to think about. And if you want to see how we're doing it live with the two of us, come and jump into the Discord channel. Not only Igor and myself, but you got Gabe, Gary, and other traders in there that are posting their trades, doing fantastic stuff. If you want to get in on the Discord, there's a promo code down below in the description, 40 OFF, 40 off, gives you 40% off the first month subscription. Trust me, if you do it and you hang with us for a full month, you will make that back and then some. Okay, 10, 20, 100-fold. Okay, you're going to make a bunch of that back. One ES 112 trade probably pay for your entire subscription for the next 4 months or so. So jump in, see what we're doing, subscribe, come join us. Take the Black Friday opportunity here. If it's Thanksgiving and you're not watching football, eating turkey, and you're watching some videos here, which you should be with your family anyway, get your family watching the videos, join up, have some fun with us. You're going to find some really good quality people, not doing crazy stuff. I'm not promising you $10,000 a day or a week or a month or something like that. Okay. We're trying to earn consistent monthly income, 3% a month. We're exceeding that this month. Okay. We're up 6.7% in realized gains already. Come and get with the plan. And we're going to be doing some one-on-one and some group coaching as well for some of our members. Great stuff. How to create your written trade plan, how to create and use that spreadsheet tracking program that you see here. We're going to go through advanced option strategies. We're going to go through how to set up a trading business, okay? How to get your mindset right. And then we're going to walk you through your trades and your portfolio every week for about 10 to 12 weeks. So come and join us with that alone. That's going to be a fantastic opportunity for some traders. All right, we'll see you guys. Happy Thanksgiving to everybody. Stay safe out there. Enjoy the time with your family, and we'll see you guys all on Friday for a short day. Bye-bye.